Hi, this is Brent with Trade Therapy. Welcome to the Trading Couch. We were talking about PayPal, our Clarity Spotlight last week. First time we've looked at PayPal since April. And in April, the message was pretty clear. PayPal, after going through a multi-year breakdown, had settled into this accumulation range between 55 and 65 right here. In April, it had completed this really nasty back test, which was the tariff scare, but you can see it completed a false breakout right here. These are late stage accumulation tactics that are very common from Wall Street. After they build big positions like this, they're looking to flush out any last remaining sellers before they launch their uptrend campaign because they don't want to have to absorb that as they move forward. We're going to take a look at the updated charts. We're going to take a look at how we believe this is a test and it's not breaking down further. We're going to walk through it step by step. Here in April, we did talk about this low right here and these previous lows and how there's liquidity under here if they want to push down just below that. We did not see big selling going on at the top here, which would indicate profit taking is raising capital to take advantage of a big hard push down below here. We did not see that. So that leads us to believe that this is a test. This is not an aggressive markdown campaign, that they are looking to test for any additional sellers. This is a signature of strength, believe it or not. That means that we're very late stage. That means that the institutions are preparing for their next big move. And so we were keeping an eye closely on this level to see if demand held once liquidity was taken out from below that. And if we jump over to the August chart, we can see that what we were looking for is exactly what we got. After the false breakout here, we got a false breakdown. It did come down and take out the liquidity just below that, and then we get a reaction to this sharp breakdown here. So this breakdown builds the cause, and we get that reaction from it. Now set up in this ABC type of a back test. Again, we don't see heavy volume taking profit at the top here, which would indicate that institutions were interested in accumulating more down here. We don't see that high volume at the top. So this leads us to believe this is a test. There is no incentive to drive prices lower because the stops have all been taken out here. The last remaining low is where the institutions are positioned. You can see this heavy volume buying in here at the low. So the odds are likely they're not going to try to go after that because sellers will be met with very strong demand there. So given the absence of heavy profit taking, after this push right here, we didn't see heavy profit taking here. After the push down, we didn't see profit taking here from the reaction to it. This tells us that we may be setting up for the more higher probability play moving forward if we're able to see this low supported right here. We are long PayPal. We're looking to add to our position in the low 60s right here. If it goes below that, great, we'll buy it. We don't think we're going to get there. Our trade on this ad right here is going to be from the low 60s up into the 77.60 area right here. If it can get beyond that high right there, it will test this structural high right there. And by then it will be above its 200 weekly moving average, probably back test that level right there. And then it will be ready to move on into these upper ranges or these upper Fibonacci targets. You can see this big inefficient range right here. We've identified this one just because of this big hole in the chart right here. There's no resistance. So once price can get up into this range, it will very quickly get through there. The markdown campaign has left really a lot of resistance in the entire chart in PayPal. So if we can get beyond this last little leg down and beyond this overhead resistance to get up and into this uptrend and markup, we think we're going to see much higher ranges in PayPal very quickly. If we jump over to the daily chart, it makes the intent behind this even clearer. We did not see profit taking on this false breakout. You don't see high levels of volume right here that would tell us that institutions are still wanting to load big when it gets down, when they get down here. They're not raising capital. They're testing out lows and trying to harvest stop losses right here. There is not a lot of intent to drive this further down. Otherwise, we would see big volume right here, raising capital to help them do that. In the same situation, same setup as here. We did not see heavy profit taking here. This tells us this is setting up for another back test. A constructive outcome out of this would be for this low to hold right here. If we come down into this low 60s area right in here, possibly even high 50s, if we can hold this low right here, sets up nicely for a measured drive up to 77.6, which is the 236 Fibonacci level from our higher time frames. Breakdown risk is still present. They could still come down and go after this low. The daily makes the intent very clear. If we see a pullback here that does not get below this low, PayPal sets up very well for this next level up. If it does not hold, it breaks down below that, then clearly institutions are going after that durable low. This was part of our institutional literacy call out this week when we talked about low volume pullbacks. Low volume pullbacks are tests. That is not Wall Street dumping their position. They're looking for cheaper inventory. If they sell aggressively at highs, they want to raise capital. They want to fund this push down to accumulate below. When you don't see that, that's a tell that tells us that they're not trying to push down much further below that. They're not trying to aggressively accumulate large positions. They're testing demand. They're looking to flush out the last few sellers. And so recognizing these differences is the key to trading with institutions or trading against them. It's these small nuances that you need to keep an eye out for that will give you indication of what Wall Street is looking to accomplish there. So in late stage accumulation, it resolves in one of two ways, either through time, through prolonged chop back and forth. If there's little liquidity below, they'll do that just to flush retail traders out, or through price. They'll flush it down really quickly, which we believe will most likely be their tactic here. They'll flush it out really quickly. A defended back test and stabilization above this low right here, it is going to be our tell that the new uptrend is beginning and the new markup campaign is underway. So the bottom line is this: PayPal isn't lagging because the fundamentals are broken. Fundamentally, their business is doing very well. It's lagging because institutions are still managing inventory and liquidity. It's the same theme we've seen across the entire financial complex this week. When we did our top-down analysis, everything is either coiling, retesting, or absorbing supply, preparing for the next leg up, which we believe is going to be timed with the monetary policy change, because we believe PayPal is in a position to benefit from that. When we see policy change, the impacts of that in the interest rate sensitive sector should be almost immediate. These are the sectors that have been compressed. They have been held down through this strict monetary policy period. Once that changes, if the July low holds, we believe markup is next. If there's one more flush, so be it. We'll buy more because we believe markup and the new uptrend will be launching from there. Either way, this is not distribution, it's preparation. Thanks for watching this breakdown. If you want access to the full clarity article, the full details, the charts, and all of our trade considerations, including our cascading stops logic and entry strategies, join Clarity. Join us at Trade Therapy. You'll see a coupon here in a second. That's all the time we've got for PayPal this week. We'll see you next week.